pull up the trusty Edge Finder. There we go. So NASDAQ and the FTSE remained the most bullish assets. So let's have a look into the NAS. Let's see if we could potentially have a trade. I know we looked at NASDAQ yesterday and we didn't see that much. Yeah, there's still not really much of an interest here. The problem is with the NASDAQ, or actually the S&P as well, they're at this pretty major level that I wouldn't really want to buy or sell into. So we've obviously got previous structure over here with the support, failed breakout here, previous resistance there, and it looks like we're having another rejection now. So I don't want to buy into it because the trend is also to the downside. But of course, Edge Finder is bullish, so it puts us in a bit of a predicament. So the only thing I would really see here would be a 50% pullback. So if we could see this 50%, if we could see the rejection here, see the market pull back by anywhere between 50% and 618, that would also then fill this gap on the left, and then we could likely see price continue to trend higher. That would be the game plan, but in the markets at the moment, who knows what's going on? Trump can say something and, markets are crashing or they're pumping. So yeah, tricky times to be in the markets right now. Chilling in New Zealand CAD trade at the moment, kind of a rising wedge. So let's have a look. New Zealand CAD. Yeah, I know it was bullish on the Edge Finder. It seems to have fallen off, but it was one of the most bullish readings previously. I suppose you got the trend here. You've got, I'd say this is, in my view, this is more of a channel. I'm not sure it's a wedge, but maybe I'm looking at it differently to you. But yeah, I think, to be honest, the trend's bullish here. We've got a very clear moving average cross indicating the trend change. We've got a bullish channel, or I would call it a bullish channel. Yeah, I actually don't mind it. I don't really have a fundamental view on New Zealand CAD, but the technicals look pretty safe. Should I sell or buy dollar yen? I don't know. What does your plan tell you to do? Surely you've got some research and an approach you follow. Got stopped out of a gold trade this morning. Was 0.75 of my margin. I'll wait for a better entry. Yeah, just take care. So the markets at the moment are actually quite risk on. So we're seeing gold come to the downside. We're seeing silver down as well. And it seems like, the markets are taking a little bit of a break from their pumping of gold and downside on equities. So yeah, just be cautious. I would say I would say buy now, not actually buy now. I just mean it would be more of a long position at this time in my view. As I said, we've got a bit of a risk change at the moment in the market. So we're seeing the yen down, we're seeing the Swiss down, the euro's correcting, the dollar is heading back to the upside slightly, along with this really strong monthly level that we've got here. So I wouldn't really want to be selling the dollar right now. I would be quite happy to go for a short-term long, obviously selling off the yen temporarily, buying into the dollar, and seeing if we can get some sort of correction of this move here. But for me, this is against the trend, so I can't justify a long position, but I think longs are probably a better idea than shorts right now anyway. DAX. It's got a slightly bullish reading here, so we do have a score of 5 on the DAX. But do I see anything on the charts? Not really. Similar situation as, I think it was NASDAQ we discussed previously, but I would need to see this gap get filled. I don't like to buy if there's an unfilled gap below. Just doesn't make much sense to me. So I would be quite happy really to just wait. Actually, let me get rid of that. So that would come and retest this previous high, fill the gap. Maybe we would get the moving average cross here as well, just to indicate the trend change. So something like this would be actually quite good, but that's if we can get that pullback. We'll see. We place you in Kenzo's slot. He's traveling today, so I'll quit. Oh, okay, I get it. I see. Thank you. Going to hold dollar yen till it's all-time high. I'm not sure we're going to get back to all-time highs on dollar yen. when I was saying long dollar, it was more just a short-term idea. I am fully expecting the dollar to come down towards 90 over time. I'm obviously not anytime soon. I'm not saying that's next week, but later into the year, 90 to 80 is where I'm kind of looking to get to. I'm also still very bullish on the yen over the long term. So I think dollar yen is a pretty strong short position, but at the moment for a short-term trade, I think long makes sense. But yeah, I will be looking anywhere between, anywhere below 150. I'll still be looking to go short. If it breaks above 150, I might scrap the idea temporarily.
We launched the Edge Finder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the Edge Finder is producing now. The Edge Finder has helped traders go from beginner to pro in terms of the fundamentals, and has helped many traders go from unprofitable to finding the missing pieces in the name Edge Finder. So if you're not already using the Edge Finder, let me tell you about the biggest discount that we offer all year long, starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the Edge Finder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the Edge Finder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the Edge Finder at the super discounted prices. Thanks for watching. And now back to the show.
Gold buy. Okay, so you're in a gold buy. Yeah, I don't mind this actually, to be honest. If it wasn't Friday, I would consider taking a long position here. It is at the level I've spoken about. We could have a stop just below this 50%. Probably have much a larger take profit, to be honest, more towards sort of 4,000. But I think this is quite strong. I don't really like to open new trades on a Friday, so I'm not going to take it. But I might take this on Monday if we can hold this level. If it goes back to all-time highs, you owe me a coffee. Okay, and if it doesn't go back to all-time highs, you owe me a coffee and subscribe to my YouTube channel. What do you think about pound Australian? I'm not sure. I don't have anything on the top of my head, but let's see. I mean, what can you do in a market like this? This would be a case of just range trading this, really. Buy the support, sell the resistance. There is nothing else you can do there until we have a clear break of some direction, whether it be a break to the upside, retest here and to go long, or the retest here and then go short. But this is completely untradeable for me right now. UK 100, I have ES, break the lows. This fake out rally, okay. Yeah, I don't really have an opinion on that because it's not something I really trade. So if we have, let's say we had this, I would assume this is the sort of situation you're talking about. I would enter on the retest, but only after a certain amount of confirmation. So I'd need to see the RSI do something. I need to see the moving averages in a certain direction. I would need to see a bullish a bullish engulfing candlestick just to confirm momentum. If all that doesn't work, then fine. But yeah, I'm not too interested in, trying to always identify a fake out or a dead cat bounce or whatever you want to call it. So grown ass kid wants footsie. Also, I'm not sure if you guys can hear my cat, but he's sat here screaming. Okay. See, I was looking to go long, but I'm not really that interested in taking the trade anymore. So we've got a very bullish reading on the FTSE. COT's flat, retail position is bearish, so that's quite nice. So sentiment is in our favor in terms of retail. So yeah, it seems quite simple actually. Where are we at here? So I'd be looking for this gap to get filled on the FTSE. In the meantime, to actually get into the trade, I'd be looking for a pullback into this 200 moving average. And this would be, obviously, it's only on the H1, so it'd be a very sort of, I guess, intraday position. But again, just focusing on this gap getting filled. But yeah, I'd keep it quite simple, to be honest. The FTSE is not an easy market to trade because it's very choppy. It's quite rare for the FTSE to have a very clean trend. So it's very easy to get chopped up in the FTSE. Thoughts on Euro Pound? Yeah, it seems to be staying within this range. So the range here between 0.86 and 0.85, this is a range that ING, they provided this range and said that they expect Euro Pound to just continue ranging in here for the foreseeable future. I have a slightly different outlook. I think shorts are definitely a solid idea, but it's more a timing problem now because we are expecting the UK to have higher inflation at the end of Q2 into the rest of the year, which obviously hold off rate cuts, which will benefit the pound. The euro strength might be coming to an end. Obviously, we saw a large amount of euro strength due to the stimulus, so that was helpful temporarily. But then recently, the euro has pretty much just been held up by capital flows out of the dollar into the euro, which is the next most liquid asset, really. So if we can start seeing that get priced out and we can see dollar bulls come back and we can see inflation in the UK start to rise, I think euro pound is a great position to continue the mean reversion strategy. Let me put us back to the H4. So you can see the behavior of the market is very repeatable. So it just has spikes here, spike here. Every time it spikes, well, maybe not every time, but the majority of the times it spikes, we very often have the bounce back to the downside and then the continuation of that downside trend. So yeah, I think if we could see those catalysts start to line up, I think Euro Pound is definitely a solid idea to have in the watch list. Okay, so Swiss yen. Oh, actually might be giving me an opportunity to scale into this position at some point. There'll be one for next week. We've got euro dollar that's not really done anything. Copper avoided stop loss barely, so we might be able to get some pullback here on copper. Dollar Swiss shorts is still an idea I've got, but as I was saying earlier, I am temporarily bullish on the dollar. So if we're seeing risk come back on, we're going to see outflows of Swiss, likely inflows back into the dollar as well. So short dollar Swiss right now doesn't make any sense to me. Silver, I would love to go long silver, but as we discussed yesterday, the put to call ratio is pretty dismal on silver, or it was. Let me just make sure it still is. Oh, it's not actually. It seems to have pulled back, which is nice. So it was at extreme greed, which was a bit of a red flag. It's like retail being majority long silver. So we can see maybe a slightly deeper pullback, but this is also acceptable. So we've got the break. This could now be classed as a retest. We do have this moving average cross indicating the trend change. So it might be worth taking a low risk position maybe on Monday and just see if we can get something to continue higher from here. If not, then this idea stays the same, that we're looking at this 50% retracement that also lines up almost with previous structure through here. So again, just keeping things as simple as possible.
I spent a lot of time yesterday in the afternoon just going through and reviewing like all the technicals in the market. So here's what I think. Right now, we are hitting past support becoming resistance. Now, we're going to see how firm this resistance actually is. Because if today's candle, this is going to be a key level. If today's candle, number one, doesn't close above 5,500. So if we're not greater than 5,500, okay, above 5,500 would actually be seen as a pretty good relief rally, because getting above that means there's open space to get to 5,700. So greater than 55 is going to be critical for the bulls to kind of maintain this little melt up. If today's price is going to be a rejection candle, and if today's candle ends up pushing down lower, I think that is a dark cloud. I think that is a potential candlestick pattern that pushes us back into the gap that we saw this week. So Friday, Thursday, Wednesday, Tuesday to Wednesday, a big gap to the upside. Obviously, Wednesday's price action faded for the day, but Thursday was a nice little rip. But that 5,500 zone right here, you can see that is past support to become resistance. We're also on the trend line of the S&P. I know the NASDAQ broke the trend line. We can go to that chart in a second, but this is a really critical spot. So a couple ways that I looked at this measuring, if we have a low to high swing, okay, follow my lines here. This is like pretty clean technical stuff, but follow the line. You got a swing, you got a pullback, you got a projected symmetry right around 5,700. Okay, now that would be a spot where if we can get above 5,500, the bulls can drift and melt up into that symmetry spot. This may end up giving us a harmonic pattern that looks like that. The harmonic pattern is a sell sign if the bears confirm with, you know, a toppy price action around 5,700. So that is one spot that I'm looking for the market to turn to the south. Okay, now that might be just a temporary turn in order to set up a higher low to still look at a buy opportunity to get back up to all-time highs, right? How can we get to all-time highs? Well, earnings are still coming in decent. Mag 7 next week. We've got Apple, Amazon, Meta, Microsoft. If those are all solid earnings reports, again, those are huge, large cap companies that can keep this, you know, this earnings season alive and see where everything else comes in consensus wise. So there's room to get up there. I think there's a big resistance level at 5,700. The flip side of that is, let's say that this is a cup and handle pattern. So instead of a low, high, lower, low, high, higher, low to higher high, instead of a symmetry swing like that, which I think is very valid. If instead this is a cup and handle, which we have this big dump to the downside, and then you see this cup and handle pattern. Well, if this cup and handle pattern breaks the high, if it breaks this neckline, you trade that like a head and shoulders measurement, and that head and shoulders measurement puts me up to this level. So you can see that I've got written down on my lines here, April 7 low swing symmetry and April 7 low cup and handle symmetry. So this would be my measured move. So area 1 for resistance is around 5,700 if we can get above 5,500. Otherwise, this runs, if we clear 5,700, it looks like there's no bears in sight, then this has a measured move to get back to all-time highs. And I really mean this. If we get back to all-time highs in the next like 30 to 60 days, I truly think this might go down as one of the dumbest self-inflicted wounds that the market has seen ever. I was baffled going back to one of my workspaces here. Let me find it. Is it this one? I'm just going to do a blank workspace here. I did this yesterday. I was shocked to see how wild and crazy this month has been. Look at this candle. Okay, look at this candle. This has the same type of price action since COVID. Like, this candle is over 800 points from the low to the high. We've had an 831 point move in April. Okay, over COVID we had a 900 point move. 920 points. So the price action and volatility rivals what we saw during COVID. Am I going to say that this ends the same way? Of course not. You know, we still have a trend line that is valid right now. Like the bulls are still showing, like, technically the longer term trend is still intact. But if anyone is following price action, typically when we see this long wick like this, the market might have a tendency to try to retest it. Okay, so I wouldn't be terribly surprised if this low is going to be, you know, pulling back right into the middle, and then the market may come back down to retest it. It might fail to take it out, but it might get a retest off those lows to see if the bottom is really gonna hold. If we test it again and fail it again, well, that'd be the bear trap scenario right on the verge of the trend line break, but the market still, you know, maintains like bullish posture. So I don't know, but I will say this: moving forward the next 12 to 24 months, if and when this trend line breaks, this is not exciting. This would be a legitimate bear market if we break this trend line. So if we're lucky, this market, you know, hangs in there, maybe gets to all-time highs. But this to me looks like another potential bubble. We had a bubble here that broke. We had a bubble here that broke. We had a bubble here that broke. So if we have another run up, I mean, do we get the 68 to 77,000 and then we break again? Sure, maybe. You know, not sure. But you got to keep a big picture outlook, because right now, yes, the bull market's still intact, but the scary part is going back to 0809, going back to this low. That's where things can get a little dicey. Would be like an outer trend line there. This is lows back in 2015, 2016 when the market was sideways for 2 years. There's a breach of that level from the COVID level, the COVID lows, right? So somewhere in here, it's like this would not be a fun spot to see the market, break this low. This is why I've said now for the last couple months, well, I guess the last month since we hit that low in April 7, if we're below 4,800, nothing good happens below that level, because that means it is another clear space down to about 3,500, and that would suck. So I'm not saying that's what's going to happen, but just be mindful, like if we are going to breach 4,800 with some momentum, there's not a lot of support that sits there and holds it. Okay. But I just thought, man, it was crazy to see how much volatility this month has given us. We wrap up the month next week on Wednesday, I believe. And then we also have some non-farm. We have the Fed the week after. So next week is pretty crazy. We have, what's this? I mean, are they doing anything? China and the U.S. are not having any tariff negotiations. U.S. should stop creating confusion. There you go. Claimed that called in. But I mean, are we just getting a president that's lying to us, saying that China's calling when they haven't done anything? China's reported mulling suspending the 125 tariffs. Publication cited similar medical equipment, Asian superpower. Latest decision per the report. All right. I swear, like you click on these headlines and it's like, what a disappointing. And are these even written by people? I wonder how many articles are written by ChatGPT or something, AI. Journalistic integrity. All right, anyway, let's go back to the charts. So does that make sense? Key levels. Support right here that could hold us today's resistance. If this is a price that next week can get above 5,500, or obviously today could drift above 5,500, that would be encouraging to maybe get up into this 5,700 zone. If we reject off of this level and we fall back down, then there's a gap fill here. There's still intermediate support. There's still the lows, and we're still going to be stuck in this bit of noise. But a little bit more encouraging price action would be a little bit more time on the right-hand side of the trend line shows some promise. Okay, I just don't want to see the right side of the trend line be like, well, it's on the right-hand side of the trend line, but it's going to come back and revisit the lows before the market gets bullish again. So we'll see. Either we break above here with some melt-ups, or we see price action that's respecting the trend line. So that makes the NASDAQ a little bit more slippery, because the NASDAQ, or the Qs, there's my trend line break, right? But if we can't hold, I mean, this is past support right there. So this past support become resistance. If that doesn't break higher, then we still have a gap to fill. We still have the intermediate resist or support, and we still have the lows. So if this one is a bit of an evening star that pushes back down, I mean, the bulls have to keep going. The bulls have to keep going, get this thing back into maybe 480, 485. That puts the NASDAQ, I mean, similar outlook on NASDAQ. So we've broken the trend line. Okay, but watching the S&P, it's like it's not quite clear that both indexes are looking pretty good. So this one still has a lot more. If we measure the move, and I'll do the same thing. So let's measure this out. Take your low to high. Okay, and then you have your swing right there. So that would be your swing symmetry. And if we break this kind of cup and handle neckline, that becomes your cup and handle symmetry right there. So those would be the two resistance zones. If we are going to keep drifting higher, this is resistance zone 1 and 2. Now, the nice thing is if we see price action that stays bullish, I mean, you've got some directional targets that are still pretty nice. Obviously you can go after all-time highs and celebrate all-time highs again, but maybe we don't quite get there, So, but I think this gap fill to the downside is very doable if we have this resistance holding and this market comes back to fill this gap. Okay. We have that gap. We also have some gaps on the upside. So here's SPX. Let me go back to, let me move this workspace out of the way. This SPX trade, this gap to the upside can still get filled. So big gap here. And I believe is that your Liberation Day gap? That is the second. So that is, yeah. So this was this is the Liberation Day gap. So second, the day closed, by the 3rd, the market was down. So that Liberation Day gap, if it closes, okay, markets still melt up. Let's go NDX. See if we have a similar look on that. So this gap to 19,589, that would be the Liberation Day gap. So when we ate into this, I mean, the NASDAQ had such a big rip on April 9th that we did chew into that gap a little bit, but we could fill that gap up here. But we still have this to the downside. We still have this to the downside. So there's Gap-a-palooza, and I don't know what price is going to give us. Bulls have been climbing stairs all week. That's been fine. If we get up to that level and fill the gap, does that become a resistance level? Maybe. So I am as cautious as I've ever been. I'm encouraged to the upside, but I'm cautious to the upside. So just trying to get some measurements here. I mean, obviously, if we fall back down to fill a gap here, or fall back down to this intermediate low or the lows, I'm still looking at like, okay, well, where am I going to get more bullish? Well, obviously at the lows. I'll get way more bullish at the lows. I'm hoping this market has had enough of a pause in the narrative that we're not getting like just smashed with bad news right now and negative sentiment, that things might change. In fact, I do wonder what did AAII print this week? Good Lord, we still printed a negative reading over 50%. Wow. So that's 9 weeks in a row. I think that's 9 weeks in a row. What? Let's go to sentiment. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9. Never in history has this AAII sentiment survey, lost my charts, there we go. Never have we had 9 weeks in a row greater than 50%. So extremely bad sentiment. And this is the definition of climbing the wall of worry, right? Everyone is so concerned, but the market doesn't go down.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.